Good afternoon. Thank you all for standing by. Welcome to today's conference call. At this time, your lines have been placed on listen only for today's conference until the question and answer portion of our call, at which time you will be prompted to press star 1 on your touch-tone phone. Please ensure that your line is unmuted, and please record your name when prompted so that I may introduce you to ask your question. Our conference is being recorded. If you have any objections, you may disconnect at this time. I will now turn the conference over to our host, Ms. Linda Abbruzzese. Ma'am, you may proceed.
Okay, thank you, and good afternoon for those of you joining on the East Coast. Good morning for those of you joining on the West Coast. Thank you for joining us for the second webinar in our Export-Import Bank webinar series on Extend Credit and Get Paid for Your Exports webinar. My name is Linda Abbruzzese, and I'm a Senior International Trade Specialist for the Global Knowledge Center at the Department of Commerce. This webinar is being brought to you by the Global Knowledge Center of Global Markets and the Export-Import Bank. And this webinar will talk about how export credit insurance can cover your commercial risks abroad, how the credit insurance enables you to sell on competitive open account terms instead of requiring cash in advance, and also explain how financial support can help you increase your sales in emerging markets. In a moment, I'll turn this presentation over to Mr. Michael Jackson, who's the Director for the City State Partners Small Business Training for Export-Import Bank. Our main speaker for today will be Ms. Pauline Bell, who is the Portfolio Manager of the Trade Credit Insurance for Export-Import Bank. Both of our speakers will be available at the end of this presentation to answer your questions, and contact information can be provided. Now, during this presentation and during this webinar, there will be a question and answer session at the end of the webinar so that people can have an opportunity to ask their questions. But first, let's go through a little bit of the housekeeping details to make sure everyone gets the most benefit from this webinar. So you will be able to hear this presentation via your telephone and view it simultaneously via your computer. So if you are not hooked up to both, please take a moment to do this. And if you're experiencing any technical difficulties, please press star 0 anytime during this presentation. Now we will be taking, as I said, voice and written questions for today's webinar. So to ask a voice question, please press star 1 on your telephone. Now we do invite you to type in questions on your screen as they occur to you during this presentation. There is an icon on the top of the page with the letters Q&A. If you put your mouse cursor on this icon, you can click and type in your questions anytime during this presentation. Type questions will be answered by our speakers, and any of those questions which are not answered during this webinar due to time constraints, we will get back to you via personal email. So just as a reminder, for those of you who just joined us, you can log in on the internet conference as well. And now with that, I'd like to introduce live online Mr. Michael Jackson, the Director of the City State Partners and Small Business Training for Export-Import Bank. Thank you, Michael.
Thank you, Linda. It's such a pleasure working with you and the Department of Commerce on this webinar series. Thank you all for joining the webinar today. I'd like to introduce you to one of my esteemed colleagues, Ms. Pauline Bell. Pauline joined Ex-Im Bank back in October of 2009 after graduating from Georgetown University with an MS degree in Foreign Service with a distinction of Global Commerce and Finance concentration. Prior to Georgetown, she worked as an analyst at a boutique private equity firm here in Washington, and she earned a bachelor's degree at Emory University in Atlanta back in 2004. Allow me to introduce you all to Pauline Bell. Pauline?
Thank you, Michael, for your introduction. So let's get to the slides. And our first slide is the agenda. And during the course of this presentation, we will examine Ex-Im Bank's short-term export credit insurance products and how they can support U.S. exporters' financial objectives. We'll also look into Ex-Im's criteria for exporter and foreign buyer underwriting, and finally touch on the policy management such as shipment reporting and claim filing. Export-Import Bank is the official export credit agency of the United States. The bank enables U.S. companies, large and small, to turn export opportunities into real sales, helping to maintain and create U.S. jobs, contributing to a stronger national economy. Ex-Im Bank does not compete with private sector insurers, but instead provides export financing products that fill gaps in trade financing. The bank assumes credit and country risks that the private sector is unable or unwilling to accept. Overall, Exim Bank has grown significantly, with total authorization amounting to about $14 billion just 5 years ago. The bank's product suite includes pre-export financing, such as working capital guarantees and loans, as well as buyer financing, such as export credit insurance, loan guarantees, and direct loans. No transaction is too large or too small. On average, over 85% of all transactions directly benefit U.S. small businesses. About 20% of bank's business is providing insurance, both short-term and medium-term. The market for trade credit insurance remained generally favorable in 2013, with new capacity entering the private marketplace, keeping rates competitive. This translated into lower overall 2013 figures for Exim Bank, which is generally considered a bank of last resort. We are top-heavy in Latin American countries, with 35 to 40% of all transactions representing exports to Mexico and South America. About 90% of all insurance transactions are sourced through Exim authorized brokers. In 2013, approval rates stayed above 90%, but market penetration remains low. On to the export credit insurance. Well, what is it? It's actually an insurance policy and risk management product that covers the premium risk resulting from the delivery of goods or services. Trade credit insurance is purchased by business entities to insure the account receivable from loss due to the non-payment of valid debt by their debtors. Unlike other types of business insurance, once a company purchases credit insurance, the policy does not get filed away until next year renewal, but rather the relationship becomes dynamic. Policy can change often over the course of the policy period, and the company's credit manager plays an active role in that process. The ultimate goal of credit insurance policy is not to simply pay legitimate claims as they arise, but rather to help a business to avoid foreseeable bad debt loss altogether. We use a variety of sources, including data supplied by other policyholders, to monitor any deterioration in the buyer's ability to pay. However, export credit insurance is not a financial guarantee. It's actually a conditional product with certain policy requirements. It is also not a substitute for prudent credit management practices or routine bad debt protection. Finally, it is not fraud or commercial dispute insurance. Exim short-term policies cover both commercial and political risk for periods not exceeding 365 days and are renewed on an annual basis. Trade credit insurance policies never cover 100% of the risks assumed and normally do not exceed 95% of the losses, thus ensuring that the insured supplier is motivated to manage its buyers prudently. Credit terms are normally capped at 180 days for consumable products and for sales to distributors, wholesalers, while terms of up to 360 days open account can be considered for bulk agricultural goods and capital equipment. What are the export benefits? Well, virtually every aspect of a business is insured except the most important, the account receivable, which typically represents from 40 to 70% of the company's assets. A large insolvency is actually more likely than a fire or theft or other major property and casualty loss. A company's accounts receivable are most vulnerable to unexpected losses and are likely to be affected by business cycles. Most importantly, they provide cash flow for the business. Thus, obtaining credit insurance can aid in credit risk evaluation and reduction of key accounts concentration levels. In the current environment, few companies can effectively compete without extending credit to their buyers. Obtaining credit insurance can cap exposure to bad debt loss and decrease bad debt write-offs. If a company's revolving credit line is secured by its accounts receivable, a write-off of part of those receivables immediately impacts cash flow. The same level of funds is no longer available for the company to run its day-to-day operations. It can also provide key account monitoring and backup support and assistance to the company's existing credit department. The exporter also benefits through extended financing opportunities. By utilizing extra credit insurance, companies can borrow against foreign receivables and lower their financing costs. Reduction in bad debt reserves frees up working capital and boosts the company's liquidity. It also converts non-taxable deductible provisions into a fully tax-deductible insurance premium. Well, what types of policy does Exim offer? Exim's short-term insurance products consist of multi-buyer and single-buyer policies. A multi-buyer policy is a whole turnover policy covering all of the company's export trade receivables. Premium rate in the first loss deductible on this policy reflect the average credit risk of the insured portfolio of buyers. For qualified small businesses, Exim Bank offers small business multi-buyer policy carrying no first loss deductible and a simplified premium schedule. A reasonable threat of risk multi-buyer policy allows exclusion of certain buyers in all countries as long as at least 50% of the company's export portfolio is insured by Exim Bank. These multi-buyer policies carry small discretionary limits that allow the supplier flexibility to transact business with a new buyer or an existing buyer up to specified amounts without prior Exim Bank approval. Another policy type is an express policy, which is a named buyer policy geared towards small business exporters with little or no experience selling on credit terms overseas. All buyers are pre-approved by Exim, with the policy carrying no discretionary credit authority. Insuring pre-existing foreign buyers is optional. Maximum number of named buyers on this policy is currently capped at 20. Credit reports on all buyers the exporter elects to insure are complimentary, although they remain with Exim Bank. And finally, short-term single buyer policy provides credit protection for shipments to one specific buyer. Premium rates are based on tenor, type of buyer, and the buyer's country. All short-term products carry the pay-as-you-ship feature. Shipments may be reported any time after the shipment is made, but no later than the 30th of the month following the month of shipment. As for pricing, we actually have a simplified premium schedule for small business policy, and it is up on the screen. Premium rates for the small business policy are determined by the type of buyer and terms extended. The premium rate is not impacted by the country of destination. Similarly, we have premium rate schedule for express policies. As you can see, slightly higher premium is charged to cover costs of ordering credit reports for all the buyers that the insured elects to cover with Exim Bank. As you can see, pricing is per $100 of insured shipments. The next slide, we will discuss the export underwriting standards. There are several criteria that Exim Bank uses to determine when underwriting multi-buyer and single-buyer policies. The main criteria is whether the exporter has been in the same line of business for at least 3 years and whether they had any prior export credit experience. We also look at the company's industry, projected markets, and terms of sale, as well as the overall risk of their export portfolio. Lastly, we look at the company's own financial health to determine that they have sufficient resources to prudently manage their credit decisions. As far as the content rules, eligible products must have at least 51% U.S. content, including labor, but excluding markup, with exceptions for qualified small businesses. Excluded from coverage are certain military and defense-related items, as well as sales to the military buyers. The next slide will give you a bit more detail about the short-term U.S. content requirements. The table contains both non-small business requirements and small businesses only. As you can see, small businesses have the option to aggregate if the U.S. content is below 50% threshold and still be covered for the U.S. portion of the goods to be exported. Exim Bank is currently closed in 16 countries. Some countries also carry restrictions on the usage of the insured's discretionary credit authority. Please consult the country limitation schedule at our website. The link is listed on the slide. Finally, we arrive at what do we do to make sure that we monitor all our buyer exposure. Again, depending on the limit, we have developed credit standards which are available on our website to ensure consistent and transparent credit analysis. Depending on the amount, you could be required to only provide either a credit report or a trade reference or both. Again, this is tied to the credit limit that you require for your particular buyer. When it comes to underwriting larger credit limits, and by large I mean around let's say a million, it usually requires provision of the buyer's audited financials. Main criteria to determine the buyer's creditworthiness is their debt level, liquidity, debt service coverage, and ability to generate cash flow. We also look at the buyer's industry and prior repayment experience as reported by the insured or other suppliers and financial institutions. Subject to approval, policy proceeds, in other words, claim payments, may be assigned to a financial institution to arrange accounts receivable financing or add insured export accounts receivable to the borrowing base. An enhanced assignment protecting account receivables lenders from export and performance risk is available to qualified small businesses only. Exim Bank has a web-based application called Exim Online. It allows exporters to access their policy documents, file shipment reports, pay premium, as well as file claims. The link is listed at the bottom of the screen. Claims may be filed no earlier than 90 days after the due date and no later than 8 months after the due date. Claims are usually paid within 60 days of receipt of all required documents, which are usually purchase order, contract, invoice, and a bill of lading. The insured has to also show evidence of collection efforts and any other requirements as specified in their insurance policy. For any prospective applicants looking for help with their application, please consult either Exim Bank broker or your local expert finance center. I have the contact information on the slide. You can also go on our website, which will take you to the database of our all Exim authorized brokers, as well as show contact information for the local expert finance centers. Exim Bank currently maintains 12 regional offices, branches, and satellite locations. They're well-versed in all our products and will help exporters choose the best product for their needs. So I really encourage to talk to one of our experts that will help you with any questions. They'll guide you through the application process. So they're very knowledgeable folks, and I encourage you to contact one of our experts. Well, this actually concludes my presentation.
Thank you very much, Colleen. And now we'll go to our Q&A session. Once again, if you have a voice question, please press *1 on your telephone. And also, if you have a written question, there's the Q&A tab in front of you where you can also write in your written question. I just want to explain that it's a great opportunity for you to ask a voice question because Colleen is here. She's an expert in her area on this topic, so please take advantage of this time that you have in this webinar to ask questions for Pauline and Michael as well. So I'll leave it to the operator to open the lines for Q&A.
Thank you. At this time, if you would like to ask a question over the phone lines, please press *1 on your touch-tone phone. Please ensure that you're unmuted, and please record your name when prompted so that I may introduce you to ask your question. Once again, it is star 1 to ask a question over the phone at this time.
Linda?
Yes?
There is a written question, so...
Yes. We're going to see if there's any voice questions, and yes, we'll definitely go to the written questions.
Okay.
Any voice questions?
We have no voice questions as of yet.
Okay, great. So, yes, Pauline, we'll go to the first question from Scott Shuey. The question is, does it make sense from a profit standpoint for a company that works off of small margins of 20% or less?
Absolutely. I mean, again, when you have smaller margins, it only makes sense to have insurance just in case one of your buyer defaults, and that will create catastrophic effect on your bottom line and cash flow. And a lot of our exporters are wholesalers who operate on very tight margins. But then again, they do feel that the protection afforded by having trade credit insurance in place helps them approach new buyers, enter new markets, and increase their sales while protecting their bottom line and cash flow. So even if your margins are very small, it actually makes more sense to get insurance in place, because that way you are, again, insuring yourself against any event of non-payment. The premium rate, as you've seen, if you qualified as a small business, the rates are pretty low. And again, there's a feature of pay as you ship. So as long as you have a shipment, you go online, you report that shipment, and pay premium. If you don't have a shipment that particular month, you're not obligated to pay anything. So this is a great feature that allows our exporters to spread the cost of having policy in place over a monthly period. So I think for a company, again, that has very small or tight margins, it actually makes more sense for them to have the insurance in place.
Thank you, Pauline. We have another question from Philip Milani. The question is, I was advised on Ex-Im Bank and export insurance, but was told that the requirements were very strict and qualifications were extremely hard.
Well, I don't think that this is true, and we do have challenging cases where we had to cover a lot of, groundwork in order to go ahead and quote the policy. But the requirements are not very strict. Again, to qualify the exporter, the main requirement is for you to have been in the same line of business for 3 years. If you're a fairly new company, but the company management has prior experience from their other places of work, or maybe they had a prior company that they ran, we can also look at the experience of the main executives. So qualification, extremely hard. I cannot say that this is true. The only requirement that we are strict about is the U.S. content of the products or services to be exported. It has to be either 50% or more. Again, if you're a small business, you have the option to aggregate and have the insurance on just the U.S. Generated portion of your exports. So it all depends on your situation. Like I said, the approval rate is about 90% of all applications we take in. So that should tell you that we are working with all our exporters. We are here to help you. It's only in the cases where it is really difficult to quote a policy, or it's clear that all the products are manufactured, let's say, in China, not in the U.S., that's when we turn down the exporter. But our goal is to help our U.S. exporters, opening markets for them, helping them attract more buyers for the goods. So I encourage you to either give me a call so we can have this conversation, or contact one of our experts at the export finance centers. They will give you guidance as far as how it's best to approach Ex-Im Bank and what would be the best place for you to start, what kind of product will best suit your needs. again, all you have to do is try. Usually there's nothing that you have to pay in order to apply. In our small businesses, there's usually no cost to buying the policy. The only thing that you will have to pay is once you have the insurance in place and you start shipping, all you have to do is to report that shipments and pay premium. So I say go for it.
Thank you very much, Colleen. And another written question from Scott. Yes, Scott, we will have copies of this presentation to everyone who has registered for this webinar and who is participating today. Also, this will be recorded and it will be on a website. It will eventually be on www.export.gov. And we can also send everybody a net replay immediately after, I'd say about a day or two after today's webinar. You will get login instructions on how to do the instant recording of this webinar. Another question here from Philip is, we are jewelry manufacturers and are competing with countries such as, looks like China and India on a daily basis. Trying to read through this here, the question here. Let's see.
There might have not been enough space for the rest of the question, but yes, a lot of our exporters.
If you can call in and press *1 and ask your question per voice, we'll be able to get your full question. Once again, if Philip, you can dial *1 on your question. Or on the telephone, we can get your full question.
One moment, he'll be on. You're on. Your line is open, Philip.
Okay. Yeah, actually, I was typing up the questions. I thought I might as well have a verbal question. On the U.S. content, where they say that it should be 50% or up, and when you have certain items like our jewelry items, which is gold and gemstones, and very difficult to prove the U.S. content, then what do we do with that issue?
Well, to give you an example, let's say we have an exporter who manufactures dresses, and let's say, the dress itself was made in China, but then they imported it back into U.S. and put some, some embellishments on it, like lace or some, fancy buttons or something. And if that portion that the work was done in the U.S., spread overall of the unit cost, and that represents more than 50%, then you basically met our requirement. But then if you're a small business, meaning you qualify as a small business per the SBA criteria, then you can tell us the portion that is, that is U.S.-based, U.S. generated, and then you can have the cover of just that portion.
Okay,
Again,
so
I'm not sure about exact situation. Again, the best way for you to figure out if you are eligible for support from Exim Bank is to contact the local finance center. Or, like I said, you can give me a call. We can have a discussion. Just ask. It's the best is to go and ask for advice. And then you can dig into details and see what exactly you have.
Okay. Would we have your telephone number available at any time?
Yes. Linda, do I just give it now, or are you going to provide it later?
Or your email, whatever works for you.
Yeah, my email address is Pauline.Bell, Pauline, Pauline, .Bell, B as in boy, ELL, at Exim, EXIM, .gov, G-O-V. My phone number is 202-565-3935. I actually cover companies that are located in the Southwest region. I have colleagues who cover the Northeast, and they cover California. So it all depends on where you're located. I might not be the one who gets to underwrite the policy, but I can give you general advice on how to proceed. Again, go on our website to the link where we have contact information for the regional export finance centers. Choose it based on your location. So if you're located somewhere close to Houston, Texas, we have a representative there. You can talk to them, tell them about your situation, and they'll advise you whether you have a viable transaction that we can support and go from there.
Excellent. Thank you.
Okay, thank you. Another question I have here looks like it's from Melissa. The question is, her name is Melissa Evans. The question is, how long does the application process take?
Well, it depends on the situation. For the multi-buy policy, we try to give you an answer within probably a week or 2 weeks. If you are applying for an express policy, again, this is a newer product where we act as your credit manager. We try to keep the response time to 5 days. But then again, everybody's situation is different. If you don't have any questions, once you receive your application, again, the turnaround is pretty quick. If there are some additional questions on your corporate structure, or if you have questions on how you manage your portfolio, whether the buyer's profiles, we will follow up, and that, of course, takes a bit more time. But usually turnaround times are pretty quick.
Okay, thank you very much, Pauline. And once again, we still have a couple, we have more time here. So once again, if you have any more voice questions, please press *1. And of course, if you have any written questions, please write them.
Just to add on the prior question, when you go to our website, exim.gov, there is a tools section where we have the actual application that you can print out and take a look at it yourself, just to have an idea what kind of questions are going to be asked. But what happens for almost all our exporters, they go on Exim Online, they create a participant ID, and then they submit the application on Exim Online and include any required information. You can attach any documents that you want to provide to Exim Bank. So again, if you go to our website, go under the Tools section and select the type of policy that you're interested in, and then you can get a preview of what you need to provide in order to see if you qualify for Exim Bank support.
Okay, great. It looks like we got maybe another question here.
We do have one online as well.
Okay, let's do the one online.
Okay, it's from Gary Helston. Your line is open, sir.
Actually, I'm typing the question in right now. I just got online.
Okay, do you want to speak your question?
Okay. I'm a part owner of a company that is currently exporting product to China. The company has asked me to take over the China business. I have no direct experience in the sales or in the exporting process. My role has been service and support for the China customers, so I travel to China often and I support the customers and I do all that business. I'm also an independent software consultant. So I manage my own sales here and I write programs, custom programs for people for various applications. Okay, so for the purposes of this business where I would be taking the product from my company, which I'm part owner in, they would ship the product to me and I would then turn around and ship the product on into China. But I would be doing this as a new business. I wouldn't be doing this as part of my current business. So am I going to have some issues there because I don't have direct experience like you guys are saying 2 to 3 years?
Well, again, 3 years means operating experience. So you're saying you have no credit experience, basically. Well, again, if your business qualifies as a small business according to the SBA standards.
It does.
What you can do is you can ask to see if you qualify for an express policy, where we pre-approve all your buyers. You tell us who your buyers are. You go out and collect some credit information. Depending on the limit that you need, we might not ask you for any information. So once we approve all your buyers that you want to sell to, then you can go ahead and when you have shipments, report the shipments online, pay premium, you will be covered for that particular shipment.
Okay.
And again, because all the credit decisions stay with Exim Bank, we might be lenient as far as, requiring you to be in the business for, X amount of years or have prior experience. But are you telling me, the company that you're working at, is it, like a one-person operation, or do you have other supporting staff?
Well, my business only has one employee, but I would not be doing this. I would not be doing the export business out of my current business. I would open another business as a limited liability corporation and run the export business out of that company.
Mm-hmm. Well, again, please tell us about any other prior experience you had prior to opening your current company. We will take that in consideration.
Okay.
And again, all the buyers that you want to insure, there has to be an arm's length transaction. So if you have any ownership in the companies that you want to sell to, that is unfortunately not covered.
No, I don't have that.
Yeah, so that's good.
Okay, but if I don't have the experience, can I still go through the express?
Yes, this is the policy that's actually geared toward the companies that have either no or very little experience selling overseas on open account terms. So I think for you, it's actually the best product to use at this point.
Okay, excellent.
Again, I encourage you to talk to one of our experts at the Export Finance Centers. What state are you located in?
California.
California. Well, we have 3 locations. We have one in Orange County, San Diego, and the third one escapes me, but
San Francisco.
San Francisco. Here you go.
Let's go.
So you have a pick of our regional offices to contact, and they're very knowledgeable folks. Again, they will help you for all the steps in the process. So definitely contact them, and they'll help you out.
Okay. So you have one in, wait a minute, let me see. Yeah, San Francisco, okay.
Yeah, we have, like I said, Orange County, San Diego, and San Francisco.
Excellent, okay.
Okay, great. Well, thanks, Gary, for your question, and thank you, Pauline. Once again, if you have any more voice questions, press *1. Any written questions, you can press in the Q&A tab on your screen. Operator, do we have any more voice questions?
We have no other questions at this time.
Okay, and I'm showing no further written questions as well. So with that, we'll conclude.
Excuse me, Linda, I'm sorry. Mr. Hellstrom just re-queued up.
No problem.
Sir, your line is reopened.
Okay. What are the costs of the premiums based on the dollar amounts of credit you need?
Mm-hmm. Is this the gentleman from California, right?
Yes.
Okay. Well, on one of the slides, I actually have the premium rates for the express policy.
Yeah, I wasn't online yet.
That's okay. Can you go to, let's see, slide number 9? If, well, I just pulled it up. I'm not sure if you can see it.
Yep, I can see it.
Do you see pricing express policy? So we organize our premium rates by the buyer type. As you can see, class 1 is a sovereign. This is a buyer, like a government that, in government agency that has full faith and credit of their respective government. Class 2 is a bank. So if you open a letter of credit and you want to make sure that you get paid under that letter of credit, that's the second. But majority of our transactions are done with the privately owned companies. That would be class 3. So the rates are based on the terms, and to me, you're selling software, it's selling services. Usually, the terms that are offered to that type of buyers are net 30 and net 60. So you're looking at the rate of 65 cents basically for buyers in China or outside China.
Actually, we're selling hardware.
I'm sorry?
We're actually selling a product, hardware.
Okay. Well, but then depending on what's the terms that you usually give to your buyers?
I'm going to make them pay cash up front.
Well, again, you see, in the current environment, that's tough to do, and I know a lot of our experts are being asked to offer open account terms, and that's the only way that the sale can take place. So keep in mind, the clock starts when the goods leave U.S.
Yes.
So, so when you calculate your total days that you give to this buyer, incorporate the shipping time. And, to be safe, let's just say it's 30 days. So you give them 30 days for the goods to arrive at the port of destination. And let's say you give them 60 days to repay you. That's net 90 days terms. Again, our premium rates are done in the 60 days increments. So for up to 60 days, that's 65 cents. Up to 120 days, that's $1.06, and so on. The pricing is per $100 of insurance shipments.
Mm-hmm.
And you pay only when you have an actual shipment. It's you have up to 30 days following the date of the shipment to report the shipments and pay premium. We don't ask you to prepay any premium. Again, one of the best features of our policies is the ability to plan and to spread out the costs over the course of the year when the policy is in place.
Oh, okay. So I got a new question here. Okay, let's suppose my product is $35,000.
Yes.
Got it.
Well, you see how it works. You tell us a buyer.
Yeah, I got it. All right, that makes sense. Okay, go ahead and say what you were saying.
I'm sorry?
Go ahead and say what you were going to say.
Oh, sure. So how it works, we assign a credit limit to a buyer that you want to have on your policy. Credit limit works sort of like a credit card. So let's say you have $1,000 on your credit card. You can, charge up to $1,000, repay it, and then use it again. Same logic applies here. So if you have let's say, $50,000 credit limit for this buyer, you can sell to them $50,000. They repay you, let's say, in 90 days, and you can ship again another $50,000, and you will be covered every single time.
Okay.
So as long as you stay, the highest amount outstanding at any point in time is at $50,000 that you got approved on, you're good to go.
Okay.
Okay.
So once you have a shipment,
Great.
you have the 50,000 shipment, you multiply it by whatever the premium rate that you have, and that's how much you're obligated to pay.
Right, divide by 100 and then multiply by the premium rate. Got it. Right?
Yeah, the process is pretty simple, and when you use Exim Online, all you do is you select the buyer, you put the amount of your shipment, and the system will calculate the amount owed to you. So all you have to do is either pay by ACH transfer or by credit card.
Gotcha, okay. I think that's it. I don't have any more questions.
Okay. Great, Gary, for your question. Thank you, Pauline.
Sure.
Okay, well then, with that, we'd like to conclude today's webinar. If you do have any more questions after this presentation, please feel free to write them down in the Q&A section. Also, we'll get that screen again. Here's the most current contact information that we have. If you need assistance with this information, please note also the websites, because that's where you're going to get most of your information. Also, please check out the U.S. Commercial Service, which is now called Global Markets, website at www.export.gov for more information on webinars like this, trade missions, and events. I'd also just like to remind everybody that this is the second webinar of the Export-Import Bank webinar series, so the third one is going to begin on July 8th. So please note that. You can find that on the export.gov website. We will be also sending email blasts to everyone for more information about that webinar. I'd like to thank Michael Jackson and also Pauline Bell for your input and for your presentation. And thank you to all of our participants for joining us today. Thank you to everyone, and that concludes our webinar. Goodbye.
That does conclude today's conference call. We thank you all for participating. You may now disconnect. and have a great rest of your day.